Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, October 30th, 2024. What I want to do is just cover the market and the big market-leading tech stocks. We'll look at, of course, the ones that have reported and the ones that are coming up. So again, to reiterate, we're in peak earnings week. This week has the potential to move the market, and so far we had kind of a muted response from Alphabet. I'll get to that in a second. Let's just go through these in order. Starting out with, of course, the Nasdaq 100 itself. This is the daily chart here. This is that market top range I still maintain, going all the way back to late June. We got very close to the top of it there, and right to the top on the futures, what I gave you on a little bit after I first laid out this range for QQQ. And so that's it. Not a whole lot to add. I still believe that'll be where the market peaks. So far it is, or was. And again, just to zoom in a little more micro now, we're still below that previous high, which had a lot of sell signals, bearish engulfing candles, trend line breaks, everything else. We do have the negative divergence that was in place at that time, the bigger divergence, which again shows best on the weekly. It comes through here. I'm zoomed in a little bit. Any marginal new high, and in other words, any push up to the very top or just slightly above the top of the zone, if that were to happen anytime soon, would extend the divergence again. That shows much better on the weekly chart right here. Let's take that line across, and I have different boards. This is a little messy, but you can see the orange lines. Anyways, this is how I originally laid out that chart back on July 26th. It was on this weekly time frame, and those are the targets, and I still maintain this is still my current final target all the way down here at 260.56, about a 45% drop in the Nasdaq if we get it. And what we need to do to increase the odds that my next targets are going to be hit. Remember, we already hit T2, and we covered in reverse, so it's kind of, you can look at it as one trade, a separate trade, going long off those August 5th lows. Me, if you're going to have a trend that's measured in, you're talking about half the value of the stock market being wiped out, you're not going to go straight there in a day or a week or a month. And the beautiful thing about bear markets, if that's what this is bear market rallies are very, very profitable and lucrative to trade, as are the legs down. That's the thing. Stocks fall a lot faster than they rise, and that's one reason you see so many short trade ideas from me. If you're active and nimble and you can get in, get out, hit and run, you'll make more money on most short trades in a shorter period of time than you will on trading the same security long during an uptrend. All right, but the key levels, the salient levels that you need to be watching right now are the uptrend lines off the lows. Let me toggle back over to my daily chart. That's it here in orange. I know this is a busy board. I can make it really clear for you by turning everything off and simply draw a trend line off that major low on August 5th right there. We come in, nice clean reactions. So that's what we're looking at now. Whether we get it this week or 6 months from now, if we go up higher and that trend line stays intact, especially if we get additional reactions on it, then that's one to watch. So right now, to summarize, the current intermediate term trend is bullish. That's intermediate off the August 5th lows. It's kind of indeterminable if you look at it from a bigger picture here, because we peaked back there, and the case can be made, which I've been making. This is one big topping process here. But again, let's just see what happens. I'm going to go over the individual stocks today. There's the smaller divergence, so we don't have to make an equal or marginal new high. If we do, it'll extend that bigger divergence. But we do have, even on the daily time frame here, and very much so on the 60-minute, that same negative divergence. This is it right here. You can see we've been walking up. It's a series of 3 consecutive divergent highs, starting with this one, which resulted in a correction there, another correction. And now if we get a correction that even equals these 2 little pullbacks right there off those previous 2 divergent highs, and it would make sense because typically the bigger the divergence grows, the larger the ensuing trend reversal once it comes. So that would take us down and trigger the sell signal below the uptrend line if we were to get it. So let's see where we go. I'm going to go over the big tech stocks now, and we'll keep the video relatively short. Apple, still the big dog here. Nvidia's nipping at its heels, but Apple's still the biggest component in the Nasdaq 100 as well as the S&P 500 by market cap. I have always do this when I do these videos. My watch list of all the components of a sector or an ETF or an index is to the right of it. It's not always covered in the screen recordings. And you can see I sort them. I think you can just see here to the edge of the screen. I'll bring it in. There's the market capitalization. So Apple's a $3.6 trillion company. Nvidia's $3.4 trillion. Microsoft at 3.2, and then so forth and so on. In Alphabet, you have to add up both share classes. That's kind of a little deceiving when you look at just one there. You need to add up both of them. All right. There's the, let me put it back here. There we go. Okay, so Apple has broken today. It is dipping below the trend line. However, they're going to report on Thursday. So I've, personally, and I very much advise take this breakdown with a grain of salt. Now, to me, the chart is clearly bearish. In other words, Apple's in a near-term uptrend off those August 5th lows. That's where we covered all shorts, went long. But it's also back below where it peaked back here, just like QQQ. And it makes sense. Apple's typically, the chart of Apple will overlay or almost mirror QQQ because of the big weighting. And not just that. It's those Mag 7 stocks. They have a very high, very strong correlation. Once in a while, one will kind of do its own thing, like Tesla lately. The chart of Tesla looks different. But collectively, if you average them all out, and they do, it's what it is. The Nasdaq 100, just like the S&P 500, is a market cap weighted index. So it takes the, obviously the bigger the market cap, the higher the weighting in the index. So therefore, that's why Apple, Nvidia, Microsoft, Alphabet, Amazon, Meta, and Tesla collectively will determine where this index goes. So that's it. We broke down. As I like to say, a breakdown is a breakdown. You can take it on face value. It's a daily chart, so you'd have to close, and you'd have to have a solid daily close. Right now, you have to really zoom in and see it. And yeah, we're below the trend line. Again, I can't make much of it because they're going to report on Thursday, and this can go either way. However, let's talk about that. That's why I do these long-winded videos. I'm rolling back here as far as I can on the daily chart. Goes back years. You can see all the divergent highs marked all the way back. There was one just to the left of the screen. I can't scroll back any farther. I have to go to a different time frame. And you had that correction into that 2019 divergent low, bullish, divergent high correction. You can see all these divergent highs here, divergent high there. And these, it doesn't look like much, but these are big drops, some of the biggest drops in years in Apple. Divergent lows were your rally. So again, it behaves very well. This is my style of charting. It's not everybody's. Divergences aren't sell signals. They're just indications that a trend reversal is likely, whether they're bullish, like a divergent low, or bearish, like a divergent high. Then what you need is a catalyst. You either, buy a pullback to support, or you buy a breakout above a downtrend line like there. And there was your next breakout. So you had double support there, double low, major support. I was highlighting at the time. I had that level purple. Even back then, I had some long-term bear market targets that I said would not be hit. They're not even on the table until the market took out those purple levels I had in key stocks like Apple, which they never did. They successfully tested and defended those support levels back in late 2022, early 2024. And so that's it. So then Apple had this trading range here. You can see bouncing between powerful breakout right there. And we're going to zoom in now and talk about where we're at now. So again, this to me is a very well-defined, very significant uptrend line. It matches the one on QQQ that comes off the April 5th lows. And post earnings, if it can break this level, I've laid out price targets for you with a sell signal to come on there. Again, I'm going to, kind of park this. You can take it, it's up to you, or you can wait. The benefits of waiting till after they report is a much smaller chance, assuming you get a daily close today and it triggers. You have a much smaller chance of that being a whipsaw if you wait till earnings are out of the way. However, the downside is this stock could gap down. Apple has a history of gapping up and down high single, even low double digits. It can move 10% or so on earnings. There's no rhyme or reason to where it goes after earnings, but you've heard me say this once If you follow me, if you've heard me say it once, you've heard me say it 1,000 times. If a chart, the posture, not the current trend, that's where a lot of people get confused. Current trend right now in Apple since April 5th is bullish, but the technical posture is bearish with the divergences and everything else I've covered, overbought conditions. So what I've said many times over, if a chart is clearly, the technical posture is clearly bullish or clearly bearish heading into earnings, that is the way it often goes. So obviously you can see there's a line here. You might not see it in the video. Some of them are colored purple, but I have these little blue lines right here. I'll tell you what, when I click on it, these are earnings right there. Those are the earnings dates. And remember, Apple always reports after the bell, so you see the move the next day. And what I'm going to do for you is we're just going to kind of look. And, I try to do this, speak to all types of traders, investors that are using this service, especially those new. And one thing that I've come up with years ago is called the Know Your Security rule. If you're going to trade a stock, number one, make sure you know when earnings are. That's number one. If you're swing trading especially, you have to make a decision if you hold into earnings or not. You're always running a bit of a crapshoot heading into earnings because a stock can gap either way, for or against you, and it can even stop a gap in the morning. An opening gap can bypass the most well-placed stop-loss orders. Just remember that. Your stop-loss order will be shot right past on a big gap, and so it's hard to quantify or limit your risk to that level of your stop. In other words, if you're at Apple and you have a 5% stop loss and it gaps down, and let's just say you're almost to that stop loss now, you're within 1 or 2%, and then they report earnings and they gap down 10%. Well, guess what? They shot way past. You've doubled your loss allowance now. So you have to decide how to manage that. Now, the downside to waiting till after earnings is sometimes exactly that. The gap can go your way, and then it may not prevent an objective short entry. So right there, right here, this is the day they reported. Remember, they report in the after-hour session, so that's what happened in the morning. So in that case, Apple gapped down almost 5%. You might not wanted to chase the short. However, we already had it on a sell signal. I highlighted back then. Apple had already triggered in well enough in advance of earnings. It broke down below the trend line. And then you can see that was the direction, the next double-digit move, all the way down till down here. So it was forecasted or foreshadowed and covered at the time that, the Apple would probably go to the downside following earnings. And that's what that was. That was a drop from about 200 a share all the way down to about 166 or so a share. Pretty hefty correction. Then a divergent low. Okay, here's Apple heading into earnings back here. There's a purple line right there, the earnings report. And it had just broken out of a downtrend line, bullish falling wedge, come off support with big positive divergence in it, oversold. That was a clearly bullish technical posture. Where'd the stock go? Rallied from there. The next report was right here. This one was kind of indeterminate because we already had a correction off that wedge break and a kickback rally. And, the initial reaction was about flat. You can see if I zoom in there's a report. There's the first day of trading. Market didn't know what to do with it. Sold off the next day, but you had a buy opportunity when it hit the 200-day moving average, the exponential. And it kind of then floundered around. So this was kind of a non-event, and it kind of meshes with what I say. I say if the chart's clearly bullish or clearly bearish, that is usually the next trend, next tradable trend, double-digit trend. And if it's indeterminable, it's a crapshoot. And to me, this was an indeterminable chart right here. There was no clear. I didn't have positive divergences, negative divergences. I didn't have it at support. It was just above. It was above the 200-day moving averages. That's worth noting. And that's it. So let's fast forward. February, March, April, May. This was the next report right here. Right there, May. Yep. Was this where we were? Okay. This was May right there. Breakout. There was earnings right there. Earnings day. Beautiful downtrend line, positive bullish divergence, breakout, big gap up. Let's just kind of put it in perspective for you. The stock would have opened somewhere in here. I don't know exactly where the opening was, but about a 6+% gap, right? Okay, so that's it. You can see the pattern. Most importantly, go off the technicals. This was that divergent high in island cluster top. That was a sell signal. and it came well in advance of the report. So there was plenty of time to get short, milk it down, and either cover during earnings. This is your earnings date right here, earnings report, or hold on to it. You're already profitable on the short, and boom, it went down after earnings, and then it hit this what is currently now the fourth target zone. So we've come full circle. So you kind of have an idea. Just looking, what I just showed you is to give you an estimate and show you that Apple has a history of gapping, and it can go either way. Tends to go the way of the charts. Right now, like I said, in my opinion, this chart is clearly, the technical posture is clearly bearish with this negative divergence here. Roughly equal highs, maybe even about equal highs, but steep divergence in the momentum indicators. Lower highs there, they're lagging. And I could almost flip a coin and say if Apple will pop. What they're going to do, is they always do, is they beat earnings. They manage it to the point where, for whatever reason, analysts know they're being managed down, but they still give that number. And then Apple always blows it away. It's the most profitable quarter ever, blah, blah, blah. That's almost guaranteed. If it's not ever that, then watch out, especially when the chart's bearish like this. If, God forbid, they miss anything, especially some of the key segments of earnings by a mile. But, okay, if we go up, my point is Apple has a history of going one way, sometimes having a knee-jerk up or down reaction after earnings, only to have it faded. So all I'm trying to tell you is any upside pop that takes us above that previous high anytime soon, even if it's 10%, is going to be still, it's going to take this divergence that started right here at this point, right there, and it's going to extend the divergence line. I'm just going to have to pull it up a little like that. Remember, divergence isn't a sell signal, but it'll give us a nice shape to a really nice larger wedge. Now that doesn't have to happen. Even if that happens, regardless, what I'm trying to say, there is no sell signal in Apple until this trend line breaks. So if it breaks after earnings, then that's a sell signal. Breaks today, like I said, or tomorrow, take it with a grain of salt because they're going to report Thursday. But at the end of the day, if you want to just be a purist, take the signal and then set your stops accordingly. Just know that you're going to, if you take a swing trade right now, there's not enough time between now and earnings for my targets to play out. Even if they start to get nervous, and they could, depending on what Microsoft reports tonight and Meta, you could certainly see Apple come down and possibly hit maybe the first target before they report, but doubtful it's going to hit my fourth and final current target right here. All right, these are your four targets. So that's enough on Apple. It's the biggest out there, so it has the biggest weighting on the index. And that's why I wanted to spend so much time on it. When you look at the 60-minute chart, this is the realm of the swing trader. Just look for these divergent lows and go long. Did here, T1 hit, T2 hit, divergent lows. Next divergent low down here. That was April 5th right there. April 5th. That was April low. This is August 5th low. That was the last time we covered and went long Apple or the indexes. There's your beautiful uptrend line. That comes off the April lows. It also comes off those August 5th lows, but it goes all the way back to the April lows. So that's a very, very, very significant trend line. And so you can see here, divergent high, correction, divergent low, rally, divergent high, correction, divergent low, rally, divergent high, correction, right? And it keeps bouncing off this trend line, divergent high. What is getting weaker, if you'll note that the magnitude, look at this rally here into that divergent high right off that divergent low, right? Pretty big, right? Then look at this one. It was still a pretty hefty rally off that divergent low, just not as big as a previous one. So what you see is these rallies are getting smaller. That's what that divergence is telling you. That's why it's such a big part of my trading. It's showing you that this stock currently and since April, or pretty much all year, we were long in the beginning of 2024. It was my top pick, Apple. Overweight the sector, the Nasdaq 100, that is, big tech, and Apple, and I listed one other one. I think Amazon is my two top picks, right, coming into the beginning of the year. That's when the trend, that's when these guys really bottomed. This is 2024 right here. Oh, God, I'm sorry, guys. I was talking about 2023. Yeah, that's when the trend began. And that's when Apple bottomed right there. And so that's the longer uptrend off the 2023 lows after that big correction there. Okay, so it looks like we've come full circle, and these targets could very, very well be extended, or I could add additional targets onto there. Where to? Because again, I'm not spending a lot of time doing this right now, but I will, and I always do look at the weekly charts. And very much, the case can be made on the weekly chart for a much, much larger drop. I know this is a busy board. I have a lot of lines here. I didn't have a clean board to show you. But that's a big divergent high. Negative divergence has been building all along here. And I've done this many, many times for you in the past. Showed you this chart that shows all weekly. Weekly divergences usually span months or years. This was back in the dot-com bubble. Apple fell 82% off that divergent high, 42% off. These are all off the previous divergent high. 62%, 26, 15, 16, 45, 34, 39, 35, 32. And now this is really not a reset. Those were resets. These are resets. In other words, they put in a new divergent high after a correction and a resumption, a new bull trend, corrections. This is really one big divergence that started all the way back here. The biggest, and you really have to go out to the monthly chart to see it because it's so big even on that weekly chart. And rarely do you get negative divergence on the all the way out on the monthly time frame, and that's what we have there. That's that same divergence spanning on the weekly. Last time we had anything close, and it wasn't as big. These lines should come across right here. Was back in when the financial crisis hit, the global financial crisis back in 2000, late 07 to early 09, and Apple fell 62%. So that is the only other time in decades that Apple has put in a big divergent high on the monthly, and maybe hopefully that gives you some insights to, why I have such aggressive long-term targets and why I'm so patient on that call, because these are divergences that take, again, on the monthly chart, they do take years to play out. You don't get them often, and when you do, they take years. Apple started diverging back in 2005 is when the oscillators peaked, the momentum indicators, the RSI and the PPO, and it took that long, all the way until October of 2007 when the stock finally topped. I can't say nobody. I was certainly short and thought it did back then, but very few thought it topped. And then it had a little kickback rally. It put in a top back then, and then had a little rally that almost took it to that previous high, and that was it. And it doesn't look like much, guys, because I use log scaling, but that is measured from high to low, a 62% drop. All right. And then we had RSI divergence there on the monthly, just on the RSI, and it led to a 45% drop. Okay, and I'm just going in order of market cap here. NVIDIA, they're not going to report for a while, almost a month from now. They're sort of an outlier with big tech. Most of all the big key stocks report right around this time. NVIDIA, nothing has changed. This is a daily chart here. Gave you a while back. It was also back in June 26 when I gave you my long-term targets for Nasdaq 100 for QQQ and the S&P 500. I gave you the long-term targets for NVIDIA, which I still maintain. My final and fourth current target is there at $40. Going to constitute about, from when I first laid them out back on June 26, it would constitute a 72% drop if hit. And what we did is we hit my first target. We hit the 200-day moving averages and the price target, about 97, and we bounced. And we made an ever so slightly incremental marginal, but still divergent high. And thinking that T1 is already hit, kind of like what I told you on SMCI today, we came close enough. I've covered that in recent videos that I don't expect much of a reaction, even though we're now down to the bottom of that first target zone. Same thing with NVIDIA. It's already checked T1. So that opens the door. Doesn't, it's still support. We could still bounce. It just means I'm much less likely. Remember on August, that was the August 5th lows. Clearly stated covering it, all shorts, including NVIDIA, and even going long. I don't plan to do that again if we get there. I'll let you know at the time if the charts indicate, and I have a lot of evidence the market's going to bounce and a lot of big tech stocks will bounce. Maybe I will go long, but as of now, the fact that we've already checked that target it increases the odds that it's going to break, next time around with little, if any, reaction, and then open the door down to T2, and then T3, T4. All right, so just wanted to reiterate, still very, very much like this one. I threw it out with some short-term pullback targets recently right here off this divergent, off this one right here. It was off this wedge break. Right there was our sell signal. And we hit T1, almost hit T2 down there. I can't remember. We might have hit it in pre-market. I'm trying to remember. Either way, you came close enough in the regular session here. Bounced. I give a relatively tight stop, just a suggested stop. But like I said, I still like this one. I am still short this one. It's one of my favorites, long-term positions. And there's plenty of time before they report, too. Not to mention their little sidekick, SMCI. I think with the news that knocked them down today, I think they're scan headlines. I think they're counting firm resigned or something like that. Here it is. Right there's support that this is what NVIDIA needs to take out, about 137 to open the door down to, again, these are just short-term pullback targets that would come in and backtest that trend line. But when I look at the daily chart, this is it. It takes out that purple trend line, which again was a target here, hit again here. We did the same thing. We had a short from there. We covered it long there. And this is still the most significant, very, very, very important level, in my opinion, on the video. Look how well defined it is. This chart, since they split, a lot of the lines went up. I have to, fix it, replicate them. This charting platform does not automatically adjust your lines for stock splits. But that's it, guys. So plenty of time left on that one to report. Microsoft, I know it's kind of a busy board here, but put in this divergent high, had a nice correction. This is the level right here. The most important trend line at this point in time is this blue one. Again, Microsoft, like Apple, if the market likes what they're selling tonight after they report and it wants to go up, what I'm doing here, I'm just taking my divergence lines. We had divergence at this high right here, and any equal or marginal new high anytime soon, because of how far these guys are lagging behind, will still be a divergent high. Now, we go up much more than that, then you could start taking out divergences and something else is going on here. We might be looking at a blow-off top in the market, but as of now, that's not the case. So again, set an alert. There's your trend line. Comes off the January 2023 lows. That's, again, when that's effectively when the Nasdaq bottomed, or at least most of the big tech stocks. That's where we went long back down on Microsoft. Right now, I can't make a case to short it individually, unless it takes out this trend line. Then that'll be. And by the way, guys, the 200-day moving averages are right below it as well. And that's the story in a lot of these guys. Remember, this was when we were that last correction. I was calling for initially a pullback to the 200s. I said the stock market and most of the market leading stocks have been a long, long time since they visited their 200s. I don't care how strong a bull trend, when the indexes and the market leading stocks are always going to come back and at least check their 200s every now and then during a bullish trend. And that's what they did. But in a strong trend, it's usually off to the races. Microsoft keeps coming back, testing them, and the bounces are they're not as strong as they are typically in a strong uptrend. And again, that's it. Let's not overthink it. 200 days get taken out, especially on a weekly closing basis, along with that uptrend line. That's a pretty powerful sell signal for Microsoft. Other than that, if it remains above them, then it's in those trend indicators and that uptrend line that's bullish for Microsoft. So we'll see where it goes after tonight. Alphabet already reported, big pop up, but the rest of the market's not really following. The Nasdaq has been trading red most of the day. Not big. We're down. I'm looking at the futures down 0.5% right now. QQQ is probably right around there. SPY is, or at least ES futures have gone red, but mostly flat. So again, now what it did here, it's just, I don't know, it's kind of a meh chart. this is still that BOD, benefit of the doubt support line. I added this recently. You have a lot of reactions there, that reaction there, and you're above the 200-day moving averages. So you're still well off the highs from back in July, early July. You're kind of in no man's land. So, and at resistance right now, roughly about 180-ish. We have resistance there on Alphabet. Amazon going to report on Thursday after the close along with Apple, and same story like most big techs. It peaked back in July, had a heck of a correction, briefly took out the 200-day moving averages and this primary uptrend line and recovered them. So it's been kind of a sloppyish chart, but at the end of the day, remember when it went below the 200s, at the same very time that it did, that's when we hit my price targets, T6 on the Nasdaq 100 futures to the button, whatever the price targets on comparable targets on QQQ, and collectively the majority of the indexes and or market leading stocks were all falling to their 200-day moving averages and or key uptrend lines and price support. So that's why Amazon took out the 200s but snapped right back above. And that's why I said you got to watch this stuff collectively, because if one of the Mag 7 break down or triggers a buy signal and the other 6 don't, then that's going to usually be a false signal, and that's what that was. So we snapped back above, regained them, and you can see here both humans and algos, man and machine, both buy pullbacks to the 200-day moving averages. That's what they did here. And that's the blue and the red lines, simple and exponential. That's why I keep them both up there. So that's a big level to watch going forward. Again, whatever happens between now and Thursday before the close doesn't mean too much. Where we're trading and where this stock and these others are trading in the coming week or so, that's what matters. You can see this line up here is simply if Apple or Amazon, happens to punch through and make another marginal new high. It's kind of been the trend lately. You make a marginal new high, still a divergent high, and then they sell off. There's been no breakout and run for a long time. That was a marginal new high, an even bigger drop. So if we make a marginal new high, I would expect it's not a breakout you want to buy. It's a breakout you probably want to sell into. Now, again, once these divergences, if and when they're taken out, then that'll be a different story. As of now, they're in place. And, just like back here, they get bigger. You get a correction, divergent high, and bigger. And then at this point, nobody thinks the market will ever go down again. This is just a couple years ago, guys. Remember this? Right before Amazon dropped. We shorted that whole thing down 57%. Everybody was just as bullish back then, thinking these guys are going to go up forever, and the divergences got bigger and bigger, and people probably got tired of hearing about that, and they played out just like then. You started to put in positive divergence, and that divergence here, you can see, had a little divergent low. We rallied, we gained that counter trend bounce. We had another one there that proved to be a much bigger positive, aka bullish divergent low, and that's where we were long, and that's where Amazon and Apple were my two top picks right there in the beginning of January 2023, because of, but not limited to, that big positive, aka bullish divergence. So that's it. So it almost looks like they'll want to punch up, being that they came so close to that high. They don't have to. Sometimes they do. They'll make an equal or marginal new high, and sometimes they'll fall just shy after putting it in. So let's just watch. You have the levels to watch going forward. So whether we go up or down, you know what to look for. Meta reporting tonight after the close. Same story here. Series of consecutive and just ever-growing divergences. Divergent high 1, divergent high 2. Correction 1, correction 2. Like this, as we're wedging up right here. And there's the minor uptrend line. And so it's actually, this divergence is so big. Again, you can see it spanning here on the daily. And when I see that, then I go to the weekly chart. And that's what it looks like on the weekly chart. And when it even gets that big on the weekly, I'll even look at the monthly chart, like I said. And you get that. Well, actually, this one does not have it. Has it on the RSI right there. And what I do see on the monthly chart, Meta has this. This is the secular bull market uptrend line. This is where the stock came public back in 2012, 2012. There was our primary uptrend line right there. We broke it there, major sell signal, took out the bull market uptrend line had a drop from the sell signal about 65%. So the total drop from the highs that time around was about 77%. And so this trend line, we came in and basically our back test, we've been back testing from low, but these are monthly candles. It's been a while. And that's, I always say, the problem with back testing, if you're trying to short a back test, that you can keep back testing for a while. And then when you do, you're going up and up and up when you're back testing an uptrend line. What you want to see is an impulsive rejection. So as soon as you see a big red candle close on a monthly basis off there, and even better when you take out this blue dotted line, which is the 20-month exponential moving average, it does a great job on the indexes and many key stocks of delineating bull and bear trends. Bullish when you're above it, bearish when you're below it. And again, those don't look like much. Those candles, they are. That's a big, high double-digit drop each time you took it out, especially this one here. All right, so that's kind of the bigger picture of Meta. Shorter term, again, it's this little uptrend line, and of course the 200-day moving averages. You want to see those get taken out, just like you turn off all the lines here, just like you took them out back here. You were flirting with them. There was you were in a bull trend there. You can see they were buy pullbacks to the 200s, buy pullbacks, and then when it stopped working, short rallies back to them. Finally, there were no tests of the 200s, but you gapped above them right here and never look back. And so recent test, and again, we want to see those taken out to say, put a longer term sell signal on Meta. All right, so we'll see how it acts. Tesla, like I said recently, still very much like it for the long term. This is our new primary downtrend line. All those purple little arrows show you all the reactions on there, including the most recent one with a little failed breakout attempt, especially if you put that trend line on a weekly chart, which I've done here now. Weekly chart is going to give you fewer whipsaws if you wait till the week closes. I did not mean to do that. I just kind of messed up that trend line draw. I was just overlapping the trend line here. There it is, down. And so that's it. So we're still testing that downtrend line. There's our uptrend line right there. And Tesla, it's not just that it's at the trend line and also at that previous reaction high. Traders always look at those, and that's actually resistance all the way to back here. That's a big resistance zone, a price resistance. Pretty much capped everything since this bear market started. And look at this divergence, just big negative divergence. The last time that I had negative divergence on the daily chart, which we're looking at, was right here. And from there, from that divergent high, the stock fell 54% down into that divergent low, right? And that's been the catalyst for this rally right there, divergent low. I guess we can wrap it up here. The other one that reported, that's not really a market mover as much as AMD, they reported, and it just reported and got knocked down 10%. Kind of a meh chart. I don't have a strong opinion, but I do if it breaks this uptrend line. There's the primary uptrend line. That yellow one comes off the October 2022 lows on AMD, and that's keeping, this is like the majority of semis. This one peaked, has long since peaked. NVIDIA is skewing what especially the PhilX SOX semiconductor index looks like because of its super high weighting. But you can see here AMD peaked, like so many other things. SOXX, it has peaked. Don't get me wrong, but it would look a lot weaker if you didn't have NVIDIA in there. But this is the trend line that needs to go on SOXX, the semiconductor sector ETF, and then you have the other ones like XSD and SMH. Those are just different company semiconductor ETFs with different weightings, different holdings. Okay, just to wrap up here with the Nasdaq 100 for you futures traders, with all those big tech stocks coming up, it's the same trend line right there off the August 5th lows. You need to take that out. Divergence has continued to build, so you're wedging up here on the Nasdaq 100 futures right there. That's our divergence lines, and this is the one you need to see taken out for a sell signal, and you can see all my levels down here. First target, these are little micro levels. I've given you, in fact, they go all the way back to July 10th long-term targets on the Nasdaq 100 futures, which are still very much in play. That was right here before we got up here. That was my preferred market top. We went up the very next day, peaked in the Nasdaq 100, and there's the T6 was hit morning of August 5th, and the lows perfect. Look at that huge hammer off that level, and so that's it. This is still my market top range. We're still below it. I'll give you a range, and that was the preferred top of the range there. And we went down, and I had and still do have additional targets, but there was too much evidence at that point in time to stay short and too much not to go long. So that's where we did the hard reversal. Cover all shorts, go hard long. And that's it. Now there's the uptrend line off that August 5th low. I just showed it to you on the 60-minute chart. There's our divergence right there. This is a daily chart, by the way. So if you are a long-term trader in futures, these are your targets right there. Some of those might be, I left the old targets on. We've already checked them all. So I'm not so concerned really about gaming as many bounces on the way down, because we've checked everything down to T6 has already been hit. So if we break down, if I'm right, I think you're going to see just a massive rush for the exits. Again, I can think of no better catalyst than, so far, okay with Alphabet, that's fine. Sometimes one of the big market leaders reports first, and it's either bad and the rest are good. We'll see what happens. But again, I can tell you this is the technical catalyst for the next sell signal and drop in the market. The fundamental catalyst will probably, if there is going to be one that aligns with this soon, it's probably going to be the earnings reports over the next 2 days here that I've talked about in this video. And so again, T6 has already been hit. So if we start to break down, we get going, and I've mentioned this many times in the past, but not in the last week or so. This is kind of the line in the sand where I think, or the big level, that former T5 level right there, the support about 18,504, that I think if we get down there, the selling will really start to accelerate. I think the markets will just kind of break and we'll just shoot past these lows here. So in other words, it'll be probably a semi-orderly drop down to that level. And at that point in time, we'll probably have that kind of what they call market crash, whatever you want to call it, just waterfall type selling. And I only say this now to just kind of, if that happens, you're going to want updates. You're going to want to know what to do. You need to have a trading plan. I may be wrong, guys. We just go boom, blast on through here, and then I'm dead wrong. And hopefully I'm making money on my GDX short or a wheat long or something else is paying off and offsetting. And of course I'll stop out, throw my hand away if I don't like the way these the market's trading after Apple and Amazon take it home on Thursday night. But right now, this is the way I'm looking at. And again, I've made it very clear, no reason to be aggressively long or short right now, unless you're a gambler. But if you are, go to Vegas. You get a free drink out of it. You're not getting any free drinks betting this market hard right now. Wait until this sell signal triggers, and then that's kind of the all-in short moment. If this breaks and Apple breaks and all that, and then again, if that starts to play out, I will give you continual updates. You know me, my analysis is dynamic because the markets are dynamic. So if something changes in the markets, including not limited to my outlook, bullish, bearish, and also the price targets and where I think it'll be time to cover. And I'll always talk about, if you're an active trader, and you want to game the little zigs and zags, I'll do my best trying to do that. Call it threading the needle. So we'll see. But as of now, kind of open to these deeper targets being hit. And of course, I mentioned, I talked about the earnings being the catalyst. We got an election coming up, the clown show of the century. So we'll see where that goes. So far, the market's just been taking it like a non-event. Who knows? We'll see. Maybe that'll be a catalyst too. All right, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.